Welcome. You're watching India Market Close, and it's turning out to be perhaps a better afternoon than most expected. Recovery is the name of the game. The Nifty about 0.5% up, considering it had started the day with a big hit. That's truly a big recovery from the lows of the day. The Bank Nifty is what is firing and powering today. Let's pull up the intraday chart of the Nifty just to give you an idea of how this move to green has been hard fought by the bulls. Not easy at all. You're near the day's high right now at the Nifty, 24,885. You're inching there in an afternoon which maybe is seeing some relief after a couple of very, very rough days. The Bank Nifty, like I said, is what's powering through. Let's pull up the Bank Nifty intraday as well. That is also close to the day's high, 52,175, so just 30 points off the day's high right now. I just want to pull up the advanced decline ratios before we get to the heat map and tell you what's moving on the Nifty. And this is where the story really is. On the broader markets, it's still a struggle. A big gap, a yawning gap there where the bears were dominating, has petered off, and you have the bulls inching up. So this is an afternoon session where you might see an up move deepen further. How should you play it is the question. Let's pull up the heat map very quickly, and the tail of two sets of results and their impact becomes very, very evident. Here on the downside is IT, Infosys, with its total deals at the lowest point in a long time, feeling the heat, 4.5% down. All of your consumption basket also in pain. Britannia, Nestle and HUL, ITC. Nestle is the only one which had results yesterday, but those factors seem like maybe it's going to impact the whole pack, and that's why you're seeing a bit of a hit there. Asian Paints down despite lower crude prices, usually good for Asian Paints, but then the consumption story perhaps not looking as good as expected. Tech Mahindra will be out tomorrow, but nevertheless, pain point over there. Auto IT consumption is in the area of a negative sell side. On the buying side, though, is Axis Bank. Again, we're talking about the tale of two kinds of reactions to results, and here on the upside, the first two counters, Axis Bank and Wipro, reacting positively to the numbers they've shown. Axis Bank, the standout over there for the day. Wipro, frankly, for a company that has guided to margins going ahead at 0% on the higher end, or growth at 0% on the higher end, to react 5% up, maybe because of the bonus bonus is astonishing. ICICI Bank, still some time for their numbers, but they're looking good. Shriram Finance has also recovered very, very well. So banks is really what's driving it all today, Hersh. And I think in the broader markets also some amount of recovery being seen, because when you saw the markets getting badgered, it was the SMIDs which were badly hit. I think the micro caps, small caps is the one where the pain was seen the most.
Yesterday as well, Tamanna, we saw how the advanced decline was firmly in favor of the declines, but today that has somewhere reversed. Clear positive there. The mid cap index at the day's high, we had that graph up there. There you go. At the day's high, the Nifty small cap as well, doing very, very well. It was down over 1% in trade earlier today. It's now absolutely flat. So the recovery has been, in that sense, it's been a slow recovery all through the day, but it's been a consistent recovery. No big, flip-flops in that sense. Let's quickly look at some candidates, especially on the back of earnings. And the most recent one, Elecon Engineering, the stock is taking an absolute badgering, 11% lower on the back of numbers. Quick Heal also down 7%. Margin recovery even sequentially nowhere in sight. LTI Mindtree is down 6% among the IT pack. Infosys is down 4+%. Axis Bank, obviously onto the positives, is up 6%. So doing very well in trade today. Those numbers really impressing the street. Wipro up 4.5+% in trade. Havells and a Tatacom also somewhere doing so among the mid to large kind of companies. Those stocks also doing quite well for themselves. Havells, of course, after taking a bit of a beating yesterday, is doing well today. The other one is City Gas Distributors, gas stocks, IGL, MGL, taking a bit of a knock with regard to APM. This came out yesterday Stocks didn't react as badly yesterday, but look at the impact today. They've come out with clarifications and stocks are really taking a beating. Let's pull out something like a Zomato, QIP, whether they need one or not in question. Stock down 4%. Ajmera Realty is up 7% on the back of a fundraise. And Manappuram Finance is down 13.5% on the back of an embargo on their MFI portfolio, or on Asirvad Microfinance, which is their MFI arm. That's broadly some of the major buzzers, because there are plenty of them on the list, Tamanna, but on the back of specific news, those are the ones.
Yeah, absolutely. I think results becomes the big story. Look at Hindustan Zinc. Let's just pull up Hindustan Zinc. Numbers have come a short while ago, less than about 5 minutes ago, and this number's looking good on the face of it. So we'll just pull up Hind Zinc if we can. And that has seen some upside. Metals so otherwise, but Hind Zinc after that spike actually coming off about 0.5% up. The only big losers are the Nifty IT and the Nifty FMCG. And we need to drill down on what is ailing IT companies. Only TechM now left from the back. The rest are pretty much out, and it hasn't looked pretty. Jay Bala joining us now. He's founder and chief market technician at Cash the Chaos. Jay, great to have you on the show as always. Let's begin with where you are seeing the Nifty and the Bank Nifty go, because decent recovery there, especially on the Bank Nifty.
Yeah, good to be here, Tamanna. See, I was a bit surprised that Nifty broke below the 24,694 low of earlier low of October. I was anticipating a bounce to somewhere close to about 25,480 for the Nifty and about 52,950 for the banking index. The banking index has bounced as anticipated, but the Nifty first broke the earlier October low. So what I'm anticipating is that this bounce is that I anticipated from the beginning of October. That is still playing out, but in a slightly varied fashion for the Nifty and on an expected fashion for the Bank Nifty. But this, in my opinion, is actually a counter-trend bounce and anticipating further selling pressure to come through for the market. Key stocks have come down in a trending move on the daily time frame. We count markets as moving in a trend if it goes up or goes down in a 5-step non-overlapping fashion. That has happened in some of the key stocks. We spoke about Reliance in September, and I had even put out a short call with a stop loss of about 3,100, and it has come down as anticipated to about 2675. And many stocks are behaving in that fashion. What Reliance was in the early part of September, that's where other heavyweights like the ITC, HLL, Tata Motors, ICICI Bank, they are all in that similar position, and we are seeing a counter-trend bounce. Once the bounce is finished, we're going to see added selling pressure for the market.
Added selling pressure, Jay. I want to try and break down at least today's cues. And let's pull up the contributors just for context. Within the contributors, Jay, the negative contributor, the massive negative contributors, Infosys, out of the 100 points, contributed by all negative contributors combined, 74 points is by Infosys alone. And Nifty IT is a large part the reason for the drag today, at least on the index. All the others seem to insulate IT. Just wanted your thoughts on this one. IT, any chance of a reversal in this particular pocket? Yeah.
I had been pointing out for the last couple of weeks that, if the IT index were to close below 41,000, that will be a warning of things to come. It will be a warning that probably a trend reversal will come, and which will be a mark at the break of 37,700. But 41K itself is a early warning point. And I had pointed out that TCS closing below 4100 is a negative for the stock. And if TCS, I'm anticipating TCS to bounce somewhere close to about 4,300, 4,350, and then resume its downtrend that began from the top of September. So Nifty IT index is possibly at a reversal point, but it's just early days. We just first want to see a close below 41,000 on the Nifty IT index, followed by a break of 37,700. If that happens, the Nifty IT index is probably dropping to about 32,000, even 30,000. So it's early days. Watch for a break of 41,000 as the first warning signal.
Jay, what are your stock calls this afternoon as you're seeing this up move coming in? Are you climbing on the gravy train of banks? Are you looking at anything in IT?
No, I'm basically as in my closing call of last week, I had said be on cash. And that's that would have been a good point to be. I'm trying to play a small shorts in a couple of stocks. I'm treading water on the shallow end of the pool. I'm not going to the deep end of the pool yet. DLF is a short for me with a stop loss at about 930. I'm anticipating the stock to about 680. If you had recall, I had mentioned a few weeks back in late September, mid-September, I had said avoid Nifty reality, and now that this is starting to look like weakness is starting out for the reality stocks. And this is not an easy shot, but it's you have to be very careful. Just take small puts or play it in a fashion that's neutral with a slight bearish bias. And the next chart is on Granules. Granules has been an underperformer for 2024, and it's a short call with a stop loss at about 625, and I'm expecting it to drop to about 485. And again, watch out for this. This was an F&O ban, so you might want to check that out before playing short here. But this is one of the recent weakness in the stocks, and the recent bounce looks like a corrective bounce for the stock.
Let's talk about one of the key themes of the day that we've picked, which is city gas distributors. Remember, this is a story that was flagged off on NDTV Profit yesterday itself in the morning. And then overnight, we have seen a lot of these companies come out and talk about the impact that this will have on them. What's essentially happening is the APM portion of gas which is supplied to these companies has been cut by about 20%. You have seen IGL, MGL, Gujarat Gas all under pressure. Prabal Sen, Senior Research Analyst, Indian Oil and Gas Sector, Institutional Equities at dissect, is joining us for more on this. Prabal, great to have you on the show. Let's begin with your assessment of how deep the cut will be.
Our understanding obviously is with a 20% cut that involves anywhere between 0.4 to about 0.9 MMSCMD of gas reduction. If we look at the volume estimates we were building in for next year, looking at it from a very near-term perspective, it probably will be slightly less than that since we are building in 7-8% volume growth for IGL and about 10% for MGL in our base case estimates. Whichever way you look at it, it's a very significant cut. One of the things that needs to be remembered is this APM gas allocation is being cut steadily since FY23. The number has reduced from close to 100%, in fact, 2 to 3 years ago, to about 70% now. So it's not as if the allocation of 70% was supposed to, last for any particular period of time, except that, I think most of us were building in a more gradual decline in this number, in line with the, slower production coming through from some of these older fields. But what, of course, the government has done is diverted this gas to the purposes of petrochemical, of OPaL and others, sort of shifted it to more premium gas prices. So obviously the extent of cut is a bit of a negative surprise for the markets.
Prabal, sorry, Hersh also joining in. Therefore, do you believe that your estimates now going forward in terms of a cut change materially, given that this large reduction has come unexpectedly?
Honestly, we would still want to wait for a while. We have not really changed our base case estimates as of now. What we are obviously wanting a little bit more clarity on is how soon and to what extent can prices be basically raised. We understand obviously that right now there are some state elections, there are some other events specifically in Delhi and Mumbai which could prevent this being a pass-through completely. And also the extent of the price required, which is about 4.5 to 6 rupees a kg, that makes it doubly difficult, because then if you were to pass on the entire benefit, at one go, rather the entire hit at one go, then obviously there could be an impact on volumes as well. Having said that, what we have seen, as I mentioned earlier, over the last couple of years is that, if this price hike is basically taken in gradual installments, you could have an absorption basically happening, specifically because the, the difference of CNG with petrol and diesel continues to remain extremely significant. It's still in the range of around 35 to 45%. And therefore, if you don't want to pass on this shock together. We are still hopeful that, there could be some normalization that happens. We will have to basically look at the next couple of months and see what the response is of these companies before looking at our estimates again.
And how does that change estimates overall, Prabal? Give us context. How does profitability therefore change now, given that there may be a need for a price increase as well? Is that at all on the cards for you, in your view?
So there's two ways to look at it. Right now, if you look at the change in gas cost that has happened, which is anywhere between 90 cents to about $1 plus on a blended basis for the three companies, if they are not able to pass on any of this, taking an extreme example, and we look at FY26 EPS earnings, there is a 20 to 30% hit on the EPS estimates. For example, if MGL I look at, which we are building in about 140 rupees of EPS for FY26, there's a clear hit of more than 20% if they cannot pass on any of this. Now, obviously, that's an extreme example. I don't believe that that's going to be the case. However, if they were to pass on this hit in installments, then there could be still some downgrades that can come through in terms of earnings. How much, as I said, is something that we'll have to see. It's too early right now to sort of calculate that impact.
And Prabal, on a comparative scale, all these companies equally hit, or do you see some more vulnerable than the others? For example, Gujarat Gas hasn't seen the kind of pummeling that maybe an MGL or an IGL has seen. Do you have that kind of a comparative in view of who would be worst off?
No, I think very clearly Gujarat Gas has only about 30% of its business coming through from the domestic and CNG market. So very clearly the impact, therefore, of disruption in these operations on overall earnings is relatively lower. And one needs to remember that post the merger announcement, when the stock had run up to 680, in any case, because of expectations of a very weak Q2, Gujarat Gas has anyways taken a hit, from 680 to about 550 odd levels. And therefore, that's probably also contributing to a relatively lower impact on the stock today. As far as IGL and MGL is concerned, the business mix is fairly similar. Therefore, the impact would be fairly similar. The only difference that I would probably say is that MGL probably has, tied up a lot more of term LNG as well as some of domestic premium HPHT gas. And therefore, they're perhaps relatively a bit better placed to navigate this new situation versus, let's say an IGL. I think that's the only distinction. Impact-wise, I think it would be fairly similar.
Okay. Fair enough. Thank you, Prabal. Always a pleasure to speak with you. Bad situation for all of these city gas distributors, but maybe Gujarat Gas is relatively lesser hit compared to its peers. Aditya Shah joins in now, founder at Hercules Advisors. Very good afternoon to you, Aditya. And I think we should start by talking about banks. Let's start by talking about Axis Bank. If I look at Axis on one end and Infosys on the other, seems like a bit of an extreme reaction to both, or at least Axis. You think it deserves the love it's getting today from the street?
Good evening, Tamanna. So we've seen that Axis is on a turnaround trajectory. It is one of the cheapest, larger private sector banks, and the results are not spectacular, but they are good. Actually, the results are really very good. The loan growth is stable, the deposit growth is stable, and the NPAs are really controlled at a time when the micro lending side of things is really bursting about. Axis has delivered a stable performance. I expect a similar performance from HDFC Bank as well, even though the loan growth was really not good this time around, but I expect them to control the LDR going forward. So the larger private sector banks will continue to do extremely well, and there's no doubt about it. So from that perspective, I don't see any problem in the results. In fact, the thumbs up that the market is really giving to Axis Bank results is something that it really deserves.
Right. Aditya, Hersh also joining in. Good afternoon. When you're looking at the near term, maybe 2 quarters, 3 quarters out, you're going to see rate cuts. Margins are going to temporarily come under pressure. Is that a concern for you? Because that's the commentary you got from Axis as well. That while margins are at 4%, that may come off temporarily on a sequential basis. Is that a concern?
So Harsh, when interest rate cut scenario will take place, the stronger banks and the stronger NBFCs are the ones that are going to actually win. Of course, the margins will continue to remain under pressure as the cycle turns around. But you have to look at the broader picture. The broader picture continues to be that the slippages are well under control for Axis Bank, and the slippages have not risen as they are rising for some of the other lenders and the smaller lenders per se. So short-term story of margins will continue to keep playing out up and down. However, the longer-term story of lending properly, of having slippages in place, continues to remain with Axis Bank as well. So not concerned, overly concerned about that. And mind you, the stock is not that expensive as you compare it to other large private sector banks. So I'm okay. I'm not too much bothered about the margins per se.
Okay. And Aditya, HDFC Bank to declare numbers tomorrow. Of course, margins is going to hold the key. Growth numbers have already come through. What is it that you will look out for, both in terms of management commentary and the numbers themselves?
So, Harsh, what I feel from HDFC Bank is they've really missed out on having good PR with investors, and the stock is paying the price for it. What has happened over the last 2 to 4 quarters, as you also know, that there has been a margin blip, and there has been no clear roadmap as to how long it will take for the margins to really come back. So, in the result tomorrow, I would like to see margins coming back. I would like to see a good commentary around margins, which will say that, look, here is the roadmap. We have slowed down the loan growth. The LDR is coming in line now. And over a period of next 2 to 4 quarters, margin will also start to come in line. Even though if the results are not really that great, if the management is able to give this message, I will not be surprised that the stock will start to move up on the anticipation that the margins will start to move up, the LDR will start to move down, and the bank has given up the problems that it faced on the merger. So the commentary is much more important than the actual results tomorrow, and that the management has to clearly give a sense of what they are really doing. That is something that I will watch out for personally when the results come.
Okay, in the interim, interesting numbers coming in from Z and a spike in the stock. Let's just pull up that chart. Net profit up 70%. We'll wait for the details and what really has worked, but look at that upward move. Revenue is down 18% at 2,000 crores versus 2,438, but look at the margin figure. Margins have also seemingly increased. The net profits up, margins up, revenues have taken a bit of a hit. But for a company that has been through so much turbulence, at the face of it, seems like a good set of numbers. So, Z numbers coming in there. Aditya, you know, we spoke in some detail about banks and what is expected from the big numbers over the next couple of days. But let me talk about IT. Most of the pack has reported. Just TechM is left to see. The overall view seems to be coming that wait for the US elections to be done and then we'll have some stability. My question is, what is really going to change in terms of the pain point they're facing on lack of discretionary spends, more focus on cost saving, etc. Quite sluggish in terms of deal pipeline. Why is that going to change after the US elections?
Tamanna, it is not going to change per se from after the US election as well. The US economy is slowing down, and that's the reality of it. And the aggressiveness of Fed interest rate cuts will then decide how the economy continues to really recover. So, in my opinion, I am not a firm believer that the US elections will lead to a pullback into all of these stocks. I believe that somewhere in the middle of 2025 or the end of 2025 is the real time when IT stocks start to recover per se, in terms of business performance, in terms of the discretionary spending that many companies really want to do. So net, I would say longer term investors should only hold on to IT stocks. In the shorter term, I don't think that there is any fillip for IT stocks. Maybe some company here or there outperforms, so the stock does really well. But overall, for the pack, I don't see any respite coming, at least until the second half of 2025.
So among them, since we've seen a whole host of numbers, Infosys, Wipro today, stock reacting really well, LTI, Mindtree, the whole lot of them, TCS of course came in before. Any assessment, Aditya, of what is done better or worse? Wipro at the top of the pack here?
So my top of the pack would always be HCL Tech. I feel that the company is, from a valuation perspective, it is cheaper than all the other larger IT packs. Within the larger IT space, HCL Tech is my top pick. Within the mid-cap IT space, NDTV Technology Services continues to be my top pick. It has got its ER&D service, as well as it is a product company per se. So that is something that I want to watch out for. So two stocks that I particularly am interested in is HCL Tech and NDTV Technology Services.
Okay, so in fact, I spoke with the COO of LTI Mindtree earlier today, Nachiket Deshpande, and asked him why his deal pipeline and total contract value has shrunk despite an optimistic outlook. Listen in.
Order inflow would probably not reflect the growth momentum that we see, because the order inflow also has a dependency on the nature of the orders in that, right? In terms of the deals which are TCV oriented, which are multi-year, versus the deals that are immediate in-year revenue. So hence that number is not directly correlatable to the in-quarter growth. You saw that our growth this quarter was largely led by our BFS segment, and BFS segment tends to do not have that high number of large deals. It tends to have growth within the accounts, and which are immediately converts into the revenue in the same quarter in the same year as well. So that's why it's not correlatable. But I think the revenue growth momentum that we had in Q1 and Q2, as DC called out, we are very cautiously optimistic that it will continue in Q3 as well.
Jay, just your take on some of those IT companies. Let me come to you specifically on Wipro and Infosys.
Yeah, see, these are, Infosys is particular, quite strong stock, but, it's probably with today's price move, it's probably seen an exhaustion in price, and it's probably could correct to somewhere close to about 1710. Anything lower than 1710 would put the stock back in trajectory towards the June low of about 1300 and change. Wipro is on a slightly, better track, and maybe it's got one more higher high to come through. Probably, but that will be similar to what Infosys did today. It'll probably make a peak just around 600, and then probably reverse like Infosys is doing today. So not too bullish on it, but these are the two strongest stocks in the frontline names. But I want people to exhibit caution, exercise caution here.
Okay, let's switch focus though. NDTV Profit Exclusive. My colleague Anushi Vakharia spoke to the MD CEO of Godrej Properties, Gaurav Pandey, from the sidelines of the FICCI Real Estate Summit, and he spoke about their guidance, outlook, growth expectations, and upcoming plans. Listen in to that conversation as we slip into this very short break.
I think it's a very exciting period for Godrej Properties. If you see between FY22 and 23, we grew by 56% from 7,850 crores to 12,200 plus crores. Last year, we delivered like an 84% Y-on-Y growth and delivered 22,500 crores, also being the number one residential real estate developer in India now. This year has started at an exciting note for us. Yes, you're right, we've given a guidance of 27,000 crores, but H1 has been very exciting for us. We've done almost 90% growth now, close to 13,800 crores, and the outlook for the year is very exciting because we have a huge set of projects to be launched. Generally, as a rule of thumb, H2 has been better for most real estate developers, so fingers crossed. Hopefully, we'll have a very, very exciting quarter and the quarter subsequent to that as well.
Absolutely. So, considering the strong H2 that you have and this 80 to 90% of a growth figure that we've been seeing in this last 1 to 2 years, do you see this Godrej Properties sustaining this number as we go forward also?
I think percentage, aside, because right now we're working on this particular financially, I think the market is very exciting. And if you just try and see what is the overall residential real estate landscape in India, that Godrej Properties, despite being the number one developer in India, in most pan-India market share is still in single digits per se, low single digits. So I think there's a massive headroom to grow to begin with. Add to that, we're adding a lot of, as you would have noticed, we've added quite a few land parcels in the quarter. The last one that that we've done, and I think this will fuel and propel our growth even stronger in the next year. Personally, I won't like to comment right now. Let's finish off this year and then try and see what kind of growth we can expect again next year.
Okay, welcome back. Now, one of the stocks that is really getting the rough end of the stick is Manappuram Finance, and largely because of RBI action on its subsidiary, 14% down now. Still not at its day's low, off its day's low at 145 rupees. Now, Hersh, this is something that you have been tracking, and a lot of brokerage calls today also talking about impact on Manappuram. I just want to broaden it. Of course, talk about Manappuram first, but RBI action on NBFCs also yesterday. So time and again for this entire space, NBFCs as well as gold financing, regulatory headwinds keep coming back into the picture.
Well, yes, Tamanna, and unfortunately this time around Manappuram's MFI arm pulled up for this particular reason.
What was the key point that RBI made?
So RBI not okay with processes within some of these MFIs. The lending processes are not strong enough, not happy with the way in which lending is happening. Lending is happening at a breakneck growth rate, but along with it has to come prudence and asset quality, which is not coming. So that's one part of RBI's problem. They've stated that in the past as well as now. The other part is, of course, yields. They believe that pricing of loans is not happening correctly, and therefore they want to pull up some of these lenders to say, please price your loans in a fair fashion and don't price them at very high interest rates. Do a prudent and fair pricing. Not too low, not too high either.
So this is what he had said in the in the policy.
Yes, that's exactly what he had said, and he had said that he will pull up both MFIs as well as gold loan companies while with regard to all of this, and that's exactly what they seem to have done. They've pulled up a bunch of 4 microfinance companies, and Asirvad Microfinance, which had filed for an IPO in April of this year, has been pulled up now. So embargo on all loans starting 21st of October.
Wow.
And this comprises around 25% of Manappuram's book. And it's, of course, a higher yielding book, of course, given the kind of risk that it has. it's around 10% of net worths, around 20% of profitability, around quarter of the book size but it's faster growing as well. And of course IPO bound. So all of that kind of ties in together.
And Manappuram was running up because of the hope that you'd have shareholder, unlocking for Ashirwad.
Yes.
So all the reasons why Manappuram is feeling the heat. But Aditya, I just quickly want your view on this, on the regulatory headwinds that we're talking about. I mean, Bajaj Finance, Bajaj Housing Finance, all of those are fine today. But with NBFCs, this is a problem which is recurring, isn't it?
Manna, this is not a regulatory headwind per se. You need to comply with regulations when you are dealing with money, be it RBI or be it SEBI or be it any
fair point,
Shocking,
Aditya.
Shocking.
Fair point completely. You are absolutely right. This is not a regulatory headwind. You need to keep your business clean. Otherwise, the RBI will come in.
So the biggest pain point and the negative point for this country is that the lower rung category of borrowers, they are being charged obnoxious rates. Of course, the high quality lenders do not want to touch them, but charging obnoxious rates from lower category borrowers is something that is not called for. And the RBI is absolutely correct in saying that, boss, you need to charge proper lending rates from all of these people. Otherwise, I'm going to come and give my stick to you. So in that sense, this is absolutely a wake-up call for the entire microfinance industry per se, that they need to improve on their lending. And mind you, RBI has removed caps, but it does not mean that lenders go and lend at any rate. I know some of these NBFCs are lending at about 36 to 40% interest rates. That is insane type of interest rate that anybody has to pay. So RBI is correct, absolutely correct in pulling them up. And ever since the IL&FS crisis, RBI has become even more proactive. So we should thank RBI. We don't have a banking system crisis as there was in 2018 and as there is in countries like Bangladesh, where people are struggling to get their deposits back. So kudos to the RBI, and all these NBFCs will need to fall in line with what the regulator is really saying.
Would you touch Manappuram Finance on the charts, Jay? What would you do if you held it?
It's a definite exit, and it looks like it can even half from current levels. And I'm looking at the long-term charts of Manappuram. It's probably got much more higher highs to come through, but that will be in the long term. But my interpretation is that it's probably dropping closer to 80, and then coming back to record highs. After that, say that once it closes somewhere around those levels, it's probably resume its long-term uptrend. But right now, it's definitely an avoid and probably an exit. But it's difficult to short the stock. I don't know if it's an F&O, but even if it's there in F&O, I don't think it's an easy short at current levels. But the stock is a definite avoid.
One-time price to book. Everything's about valuations, and maybe everything's not about valuations as well. But at one time's price to book, does this look good? Aditya?
Yeah. So at 0.5 times price to book, it looks good.
Okay. Oh my God.
And Manappuram at some point in time was also trading at about 0.8 times.
Jay and Aditya coming at the same page, both
no
from fundamental.
Punches pulled.
I think
KO on the show today for Manappuram from our panel.
So when VP Nandurkar had that IT raid, Manappuram was trading at 100, and that was a blind buy because at that point in time he was cleared out and the stock prices rallied. So in my view, this embargo will have a massive impact on the financials of Ashirwad Microfinance, and from to that extent, there should not be any knee-jerk reaction of buying into the stock. The impact needs to be clearly understood. The commentary from the management about what they will do to clear out RBI's impact also needs to be clearly understood, and then only one must take a call. This is now a stock for high-risk investors who can wait or who can continue to accept a drawdown of about 20 to 30% in the near term. However, can make a 2 to 3x over a period of 2 to 3 years. So high risk.
Aditya, I'm sorry, I'm interrupting. But you say 0.5 times price to book. I'm just going to play devil's advocate very quickly, maybe 30 seconds if I can. You're going to see maybe a year or so of tapering in terms of the loan book, after which there ought to be a rebound because processes will become better. Don't you therefore believe 0.5 would be a steal?
Never say never in the market, Hersh.
Okay, sure.
So one word line. My 12 years experience in the market, never say never. Anything can happen.
Okay, sure.
Okay, so that's all about Manappuram. I'm keen to know Jay and Aditya's view on some of those auto stocks also, but another one that we should focus on, Polycab, finding it tough today. So is Havells. In fact, Havells saw margins contract by 130 basis points in Q2, but what caused this hit? We spoke to Anil Rai Gupta, Chairman and Managing Director, Havells India, to understand more. Listen in.
I think generally speaking, we are quite satisfied with the overall growth performance in all these segments, including Lloyd, but also the positive aspect is the core business of Havells is also firing well in terms of growth. This is a particular quarter where, the expenses for advertising especially have gone up. This is also because of the early Diwali season and, preponing of the expenses on advertising. So we see a 50% jump in our overall ad spends in the quarter. Also, the fact that, there was a sharp fluctuation of commodity prices during this quarter, which affected the margins in the domestic wire business. But that is a sort of a one-off and we should be expecting normalized margins. So I think we're not too concerned about the margins at this stage, and we are seeing improvements in the Lloyd margins, which was always a concern. So which overall, in fact, we are happy with the overall performance.
Also, you did indicate to me just at the start of this conversation that you see margins normalize. Is it a fair assumption for me that once these ad spends, which is a one-off in this quarter, and we go into the next quarter where you have a heavy festive demand, reflecting on earnings, we should be back up at 9.5, 9.6?
Yeah, overall, the way we look at it is Lloyd separately and Havells Core separately. Havells Core, we are always targeting between 13 and 14%. So I think we should be coming back to at least, if not in the third quarter, at least in the fourth quarter. So overall, we are looking at those kind of margins.
Okay, so that was Havells, missed margins in Q2. Polycab also slumped after reporting Q2, but what are the factors impacting earnings? Mahima joins us for more details.
Polycab stock tanked almost to 7%, but the stock has recovered since then. Now, a couple of reasons why the stock has recovered is because of the commentary that the management has given. But first, we'll discuss as to what has happened with Q2 results of Polycab. Well, revenue did grow around 30%, but EBITDA and net profit grew around 3%, but margins have taken a significant hit from 14.4% mark to 11.5% mark. Now, a couple of reasons why margins have contracted. One, higher mix of B2B and institutional sales, as well as lower mix of export, and management has said that they continue to invest in brand building, which is why the cost is going up and it's impacting margins. And lastly, intense competition is also hurting margins. Now, in terms of margin history, FY24 they've stood at around 14%, FY23 they stood at around 13%, but FY22 they stood around 10 to 12%, which is where the margins have gone back to in Q2 FY25. In terms of exports, it's their highest margin segment, but the revenues for exports have come down by 29% YOY, and overall exports as a percentage of revenue have gone to 6% versus that of 9% in Q2 FY24. But there is some positivity in the result as well, where revenues grew by 30%, cables and wires grew by around 24% versus the 5-year CAGR of 20%, and brokerages too are not very cautious on the stock. Jefferies has given a target price of 8315 retained buy, and they've made minor cuts of EPS around 1 to 2%, and FY24 to 27 estimates suggest a PAT and sales CAGR of 22% and 21% respectively, and they've retained target with a PE of 42 times. The stock has, however, recovered because of management commentary that they gave in the con call. They've given a guidance of 20,000 crore of revenue in FY25. They've said that their ongoing projects will continue to drive demand for wires in the next few years, and the margins are expected to improve in second half, and they will come back between the 12 to 14%. So their margins have taken a hit, but the management commentary remains positive in terms of recovery in margins, as well as their guidance of revenue of achieving 20,000 crore in terms of revenue, which is why the stock has recovered from its days lows.
Okay, so Mahima there on the recovery, and take a look at Polycab. It has quite recovered from its days low, still in the red, but not as bad as it was at one point. Jay, Polycarp and Havells, let's come to you on what you're seeing on the charts first.
Yeah, see, Polycarp had a beautiful run from the January lows, and after it, there was some, ET raid or ED raid or something. I don't recall exactly, but from that point on, this had a stellar run, and I think it's coming to an end, or probably already come to an end. So it's probably time to take profits and get off the stocks. Wait for some correction or reasonable correction to come in, and then probably reload on the stock. Similar situation for Havells. I think further correction is due, and the stock is pointing to short-term downsides, at least probably to somewhere close to about 1,200, 1,300 odd levels. So both are profit-taking candidates.
Okay. Aditya, let me come to you with some of these consumer names. They've declared numbers. Havells was lower yesterday, has bounced back today. But what we can consistently see, whether from a Nestle, whether from KEI, whether from Polycab, whether from Havells, margins are shrinking. Concern for you, or do you believe it's normalization and will bounce back likely due to one-offs? How do you view it?
So Harsh, across the board, all those names that you suggested, even Bajaj Auto, to that matter, there is an inherent view that consumption is slowing down, and the underlying rural economy does have a problem per se, and it is not as green as the stock market is really suggesting per se. So I would be really tending to really be very careful on all the consumption stocks per se. Any stock trading above 50 to 60 times multiple, I would not like to go and buy them. I would just like to wait and see what the management is really saying. And one of the biggest negative points of Bajaj Auto's results was Rajiv Bajaj clearly saying that the festive season has not brought any cheer, and the sales continue to remain dismal per se. So from that perspective, I would be really very cautious on the entire FMCG pack per se. I will wait for any correction to come about, and only then I will try to enter into any of these stocks.
Did Rajiv say this, or are you referring to the commentary on the con call by other senior management?
He said this, that
in an interview.
The festive season continues to be dismal.
Yeah. So one thing, I wanted to actually get your view on Bajaj Auto and some of these auto names. Festive season not yet out. Two-wheeler looking like they're doing better. Dealer checks not looking that negative either. So is there really that much of a concern?
So we've seen yesterday Bajaj Auto tanking by 10%, TVS was down by 5%. It was exactly in relation to what Bajaj Auto's results were really about, and those results are not pointing out to having a great festive season. On top of it, on the four-wheeler side of it, companies like Tata Motors are already taking a planned shutdown because the inventories are piling up now. And if you also correlate it to companies like Havells, companies like KEI Industries, which are all pointing down to a slowdown in consumption per se. So from that perspective, I will not like to buy stocks extremely expensive. Mind you, Bajaj Auto or TVS Motors are fantastic companies. They will continue to compound per se, no problem. But short term, I don't think that there's upside into these stocks. Longer term, investors should continue to hold on to these stocks. Not a problem per se. But shorter term investors would need to be really very careful. There could be a case of some time correction happening as the auto sector will take about 6 to 12 months to recover back again. And after that, it will continue to do well. So cautious on them. Within the two-wheeler space, TVS Motors continues to be our top pick. It has done tremendously well over the last 5 to 6 years. And it will continue to do well going forward as well. And within the four-wheeler space, Mahindra & Mahindra continues to be our top pick. We have a clear avoid on a Hyundai IPO.
Okay, and what about on Jay, your story and your side of the thing? Bajaj Auto, do you think due for more correction or a bit of a rebound from here on?
See, the Nifty Auto Index as such, that's still a green point for the bulls. As the index is still staying about 24,300. That's still saying that not yet there is no trend change yet, but it could come through. But I mean, I've been pointing to bullishness in Mahindra and Mahindra and anticipating fresh record highs to come through somewhere close to 3,500. But my sense is that looking at the overall markets and what has happened in the last few weeks, there's a small possibility that Mahindra, what we call in technical parlance as a failure or truncation, that could have happened for Mahindra at its October high. But we'll recognize this only in hindsight. As long as the stock stays about 2640, I'm positive on the stock, but with the possibility that there is a failure move that happened on the 10th of October. So generally, Tata Motors is definitely in a downtrend. Bajaj Motors is probably getting into a downtrend, and Maruti Suzuki has got a head and shoulders top in yesterday's price action. So things are in a flux and probably trying to follow the rest of the market, but watch 24,300 on the Nifty Auto Index.
On the index, what about M&M specifically, Jet, since you didn't mention it?
Yeah, as long as M&M can stay above 2660, I'll be positive on the stock. But a lot of caution there. Until last week, I was bullish on it and anticipating 3,500, but less bullish and a little more cautious on M&M.
Okay, BTST calls, that time of the show. Jay, let me come straight to you. Buy today, sell Monday, or the other way around?
Yeah, buy today, sell Monday. But again, keep it very small because I think the overall trend is, at least the short-term trend is lower. Mazagon Dock, we spoke about this sometime in August, and I mentioned that it's probably likely to bottom somewhere around 3,700, 3,750. It is bouncing from 3,800 and change. And the very short-term structure is looking positive for it. And there is a possibility that what we are seeing today could continue into tomorrow. So there's a BTST on it.
BTST on Mazagon Docks. Aditya, you won't have a BTST, but for next week, anything on your radar?
Nothing particularly per se. I will just wait and watch others have for HDFC Bank results. If those results even have a slight bit of positivity, I think HDFC Bank will then lead the markets higher. So that is something that I will keenly watch out tomorrow. And the management commentary is something that I will want to watch. And your HDFC Bank is about 13% of the index. So if it will move, particularly the index will start to move on.
And Aditya, Kotak views?
So again, for Kotak, the results will be okay. It's no problem on the results, but that embargo that RBI has put on Kotak with respect to the rate 11 and the credit cards, that needs to be clearly felt out, or that needs to be clearly seen. How much progress the bank has really made on getting that embargo lifted. And the new management strategy going forward is something that we need to clearly see. This is the first time after the inception of the new management that a part of the credit cycle has deteriorated, particularly within the microfinance space where Kotak had accelerated over the last 1.5, 2 years. So those are the two things that I will watch out for. Otherwise, the results are expected to be decent, no problem as such.
Okay. Tata Consumers will report Q2 earnings later today. It's all about previews here this afternoon. Mahima is joining us with a complete breakdown of what the street is expecting in Q2. Mahima.
Well, Q2 for Tata Consumer Products is expected to be a mixed quarter. As per Bloomberg estimates, revenue and EBITDA will grow in double digits, around 16%. Margins to remain at the same level as they were in Q2 FY24, and net profit may rise to around 5%, so single-digit growths in terms of net profit. Now, in terms of what to expect, well, consolidation of margin-accretive acquisitions, that is Capital Foods and Organic India, and new businesses will drive revenue higher, and margins, however, will be impacted on account of raw material inflation. In terms of key things to watch out for, tea and coffee prices will be key monitorable, and impact of pricing intervention in international markets will also be a key monitorable. Now, brokerages have also come out with their expectations with respect to how Q2 will be for Tata Consumers. Nuvama expects Tata Consumer likely to see a good growth in terms of revenue on the back of the new acquisitions, and they expect mid-tier performance otherwise. In terms of Kotak Equities, they've modeled 7% YOY organic growth in consolidated revenues, revenues, and they expect EBITDA to grow on 16% YOY on consolidated basis. Lastly, Motilal Oswal expects revenue to grow around 13.5% YOY, and EBITDA margins are likely to contract to around 13.8%. So this is the street view of how they're expecting Q2 FY25 for Tata Consumer to be like.
Okay, let me come back. Jay Bala, first off, thanks for that, Mahima. Jay Bala, couple of stocks which are really buzzing in trade. One is an Ajmera Realty, up around 8% as we speak. Something like an MTNL also up 4.5%. Any views on those?
Yeah, I mean, as I've said, avoid realty stocks, but Ajmera seems to be bucking the trend. It's got a very good short-term momentum. But the medium term is saying that, it's got probably one more sequence of higher high to come through. Probably, again, caution there. When it comes to MTNL, this stock, again, it's an avoid for me. Not for people who are investors or likely to trade liquid stocks. Definitely an avoid. Do nothing about it.
What do you do with Zomato, Jay?
Yeah, we spoke about this sometime, a few weeks ago. I said it's a buy, but a high risk buy, and the stock has moved up to about 300. But I think that move is done. I think this is topping out for the short term and probably for the medium term. And if it breaks 240, I think that'll be a trend reversal for the stock.
Is that they are going to raise funds. Aditya, I mean, the chatter is about what is the requirement of fundraise right now for Zomato and the timing of it. How are you looking at it?
So it needs to rival Swiggy's IPO. That's something that I have come up with.
Okay.
Generally looking at the profitability conditions for the company and the cash sitting on company's balance sheet, I don't think that QIP or dilution of existing investors is something that is really very positive for the company per se. I've also heard somewhere that Blinkit wants to open physical stores per se. At a time when Jio is trying to close down stores, and at a time when DMart is really struggling, if that is really the case, then I don't think that it really makes sense for somebody like a Blinkit to open physical stores first. So I'm very confused by this rationale of Zomato trying to raise funds when they already have cash lying on their balance sheet, and they seem to say that profitability will come to Zomato and cash flows positive the company will become. So really confused right now, trying to avoid, and would like to understand the rationale of the management to go ahead and announce such a big QIP.
Aditya, I want to quickly take a 30-second viewpoint with regard to Axis Bank. Stock 6% higher. Give me three things that really stood out for you from the results. Positive, negative, whatever. You may not agree with the way the street has reacted, but just give your view.
Asset quality, and asset quality.
Okay.
On a bank, nothing matters more than asset quality. If the asset quality continues to remain really very strong, irrespective of any other parameter, the bank stock will continue to do well. And that is why I believe that Axis Bank stock is up today. The asset quality is in line with market expectations and slightly even better. And at a time when other lenders are significantly seeing deterioration, they have continued to do extremely well. So I am very happy with the results, and I'm happy that the market has re-rated the stock up.
Aditya, that was a nice way to put it. And what else do you require for a bank than asset quality? Thank you so much, Aditya and Jay Bala, for joining us today. Have a great weekend, and let's hope for a better week going forward. A lot depending on the results that we see tomorrow. So that's an important Saturday. Anyway, a minute odd left to go, and Nifty range bound, I would say, not half bad compared to how we started the day, but off some of its highs as well. Bank Nifty is the story of the day, roaring back, all thanks to Axis Bank, I would say, in that sense. Asset quality, because Axis is something to show, but ICICI Bank, yes. As a result of it, moving up as well. Intraday of the Nifty, let's pull that up very quickly before we get to the heat map and talk about what's been happening there, and pull up the intraday chart of the Nifty. So off the day's highs, but not bad at all. The Nifty recovering smartly from where we started off, that pain point going. I'd be curious to see what the FI number is, because you've had record selling in October so far. Have you seen a bit of a move back? Perhaps, maybe, maybe not. Let's pull up the heat map very quickly. I doubt the picture's changed too much, and no, it really hasn't. Axis up there sitting pretty, about 6% up. Wipro, so both of them on numbers. ICICI Bank following suit. Shriram Finance started at the bottom of the barrel in the start of the day, but has recovered very smartly, about 3% up. Hindalco doing well, as is Nalco. Aluminum prices have been zooming, so that's the reason why you're seeing some of those metal majors moving up. Tata Motors having a great day. I mean, I don't know if it has to do with the Hyundai IPO or what's happening with Maruti, but Tata Motors has been doing well. Infosys and a whole host of your consumption names have been feeling the heat. Britannia, Nestle on the back of numbers. Maybe a bit of a, pure effect over there. Tech Mahindra ahead of numbers weak. Bajaj Auto, after being hit about 12% yesterday, still about 1% down. So broader markets not as good, I would say, as the Nifty, because the heavyweights is what's powering it through here.
Yeah, absolutely. So 1/10% higher, but we'll take that for the way it is, at least today. We've ended in the green, and I think that's from the day's lows. It's quite a solid rise and quite a solid finish at 3:30 today, as well as a good finish to the week, which has been relatively a weaker week. Let's pull up the advanced decline, get that perspective. There you go. That's the week gone by on the Nifty, but the advanced decline, if we can, at least for today. And there you go. We've largely been at 1:1, and especially the way the day started, we can take this 1:1 home well into next week. Let's pull up the BSE 500, top gainers, top losers. There you go. Those are some names. Motilal Oswal flying away, 10% higher. It's been a week for especially for wealth managers and AMCs, Tamanna, and we've seen Motilal Oswal be one of those big beneficiaries. But along with it, Axis Bank, top gainers among the BSE 500. Who would have thought? Yeah. Featuring on that list today. And then you have Maharashtra Scooters from the Bajaj Group as well, among others. In terms of the losers, the gas stocks, of course, in focus. LTI, Mindtree, Infi also among the pile, and you also have a Zomato there, QIP, and Manappuram at the top. We've spoken about that more than enough.
Yeah, Manappuram at the top, definitely feeling the pain. Just two indices I want to look at, which is the mid cap and the small cap over the week. We looked at the Nifty, which has lost about 0.5%, and that's been tough, but it's not been as bad week on week for the mid cap. Let's look at the small cap index as well, which has been pretty much flat. So it's been a big cut on the Nifty because the major results have come. HDFC Bank on notice for the next 48 hours. That's going to be the big one. We look at banks in greater detail on Monday. But meanwhile, from Hersh, me and the team that put the show together, that's all the time we have. Thank you so much for watching. Stay tuned. A lot more coming up on the other side on NDTV Profit.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and my company in focus today is Godavari Biorefineries. It's a company which is India's one of the largest producers of ethanol in the country. The company's IPO is opening on October 23rd, closes on 25th of October, price between 334 to 352 rupees per share. It's a fresh issue of 325 crores and OFS of 230 crores. So total size of the issue comes to around 554 crores. The company is valued at little over 1800 crores at the upper end of the price band. And joining me today is Samir Somaya, who is the chairman and managing director of the company, and Naresh Khaitan, who is the CFO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Mrs. Somaya, let me start with you. You're one of the largest producers of ethanol in the country, but give us a little bit of a breakup about the kind of manufacturing you do and the kind of products that you manufacture.
Thank you firstly for this opportunity. We are a Godavari Biorefineries, which is the conversion of biomass into food, biofuels and chemicals. And so that's what our whole focus is. We are converting, we are primarily producers of sugarcane. We're converting sugarcane into sugar, ethanol under the Government of India's program, especially for the ethanol blending program. And we convert the ethanol also into specialty chemicals that find applications into a variety of fields. They could be in coatings, it could be in fragrances, it could be in skincare and cosmetics, it could be in agrochemicals across. And that's the work we do.
You're raising around 325 crores in primary issue. What is it going to be used for?
The aim is to retire the debt of the company, and the free cash flow so generated will be used to invest into later on bio-based specialty chemicals. So the objective is to retire the debt in the company.
Mr. Khaitan, what is the kind of debt we are sitting on today?
So today we are sitting as of March 24 debt of 652 crores.
Okay. And how much will you be retiring post the IPO?
Post the IPO, will be repaying 240 crores of term loans.
Okay. Give me a sense of Mr. Khaitan. This question is to you. FY24 top line was lower than FY23. The profitability was also lower, and the margins, while margins were a little higher there. In Q1, we saw, the revenues to be around 522 crores. On the PAT level, it was a loss. Is it a seasonal thing that is there in the business for you, or is there something extraordinary which is there in the financials?
See, let me put this way. For the Q1 of 25, it is always an off-season for us. So for the sugar production and the chemical and the ethanol and the power generation. So the production starts from November onwards. So normally the losses are there. But in the current year, in the Q1, what has also happened is that the B-heavy molasses stock was very minimum as compared to March 23. And this B-heavy stock, which is almost around 1 lakh metric ton, are processed during the off-season. Since they were not available, the distillery division for the ethanol producing has a minimum profit, as a minimum EBITDA as compared to the corresponding period years. But at the same time, we got supported from the chemical unit, wherein we got a EBITDA of almost like 9 crores for the Q1.
Okay.
And coming to your question for financial year 23-24, this was basically because we produced more of sugar and less of ethanol, because government, in anticipation of less sugar, has allowed us to produce less ethanol and produce more sugar.
Okay. Mrs. Somaya, what we understand is that a couple of months back, the government did open up the entire thing of producing more ethanol and allowed many of the companies to, expand laterally or vertically to make more alcohol or through the distilleries or setting up distilleries. So can you take us through what kind of impact will that have on your operations?
No, sir, just to explain a little bit on the question that you asked Mr. Khaitan earlier, the company had expanded its capacity to process cane and make directly juice to ethanol last year itself.
Yeah.
The drought in 2023 resulted in estimates of sugarcane production being lower in Maharashtra and Karnataka, for which that program was temporarily suspended. As a result of which, we had what we will say difficult numbers, what you talked about, and you asked Mr. Khetan, and we had that the seasonality that you showed in the Q1 2025. What the government has now done was consequent to a very good monsoon. They have fully restored the ethanol blending program and are targeting a 20% blend in the coming year. And they have issued, the oil marketing companies have issued a tender of more than 9 billion liters for this. And Godavari is looking forward very much to utilize its full capacity of producing ethanol for the ethanol blending program, which was made ready in the last season, but was not able to be operated fully because of the suspension in view of the drought in 2023. So we are looking forward that the program has been fully restored and the ethanol blending program is moving well, and we are participating in it fully.
Has the government also increased the ethanol prices for this season?
No, currently the ethanol prices for the coming season have not been announced.
When do you expect that to come in?
So the ethanol year commences from 1st November. So we would hope the government, that's best for you to ask the government, but first the season would be the 1st November onwards.
What's the expectation, if I can ask you as an industry person?
So the industry has asked, but the industry has asked for an increase, but we will wait for the government to give its feedback.
Mr. Somaiya, give us a sense of your operations in the sense that sugar is always a regulated entity and it's dependent on climate, monsoon, others. How do you de-risk yourself from that? Because you have integrated yourself into biochemicals as well. How do you see that segment picking up in the event of if there are restrictions that come in because of any adversities of climate or production of sugar?
So we see the future in very interesting ways. Today, climate change is a reality. As a result of climate change, there is a green energy transition in India, and that is manifested in the ethanol blending program. And so therefore, the ethanol that we are making will find itself into the blending program, and it gives a great stability to the industry. To go further, we are also looking at ethanol-based specialty chemicals. We co-create value because companies around the world are looking at how to look at more sustainability, transition to greater renewable supply chain, and also reduce what we call scope 1, 2, 3 emissions, because many countries have announced a path to net zero. India has given a path to net zero to 2070. So with knowledge, with researchers, we have more than 50 scientists. We are continuously working to convert biomass physically or chemically or biologically. I am at the core a science person. And to make products which are going to help decarbonize and defossilize the world. The entire world is looking at this, and we are looking and co-creating with customers. It takes a lot of time to develop with them. We have now done a lot of development, and that's how we are looking to grow forward as well. So it's the green energy transition, as well as working with customers around the globe to make chemicals which are there to help defossilize, and they are primarily in the specialty segment as we go forward.
Are you looking at substitution of sugar as well? Because my understanding is that you're looking at grain-based ethanol as well.
No, so that is, when you asked about how do you de-risk, we are also looking at de-risking from a feedstock point of view and a climate point of view. So grain or maize as a feedstock, maize is a 4-month crop. So if there is, for example, a poorer monsoon, you can always de-risk by having alternative feedstock. Having a dual feedstock is always very important so that you de-risk from such a situation. And also in the event a drought affects government policy in the future, we have an additional leg to stand on. And this is separate because there's also a greater opportunity. As India continues to grow, and even recently we saw that the government of India had said they were looking at ways to take the blend beyond 20%. We will look at, this market of the green energy is continuing to grow, and we want to be a participant in this. So we want to be participating in both these, the green chemicals. That's why we are a biorefinery, and the green energy transition in India and in the world.
Give me a sense of how equipped is your refinery to manage multi-green and sugar there. Is the refinery will be able to do that? Or you need to change the configuration some bit?
No, we will have to add equipment to bring in ability to convert starch, which is grain or maize or rice, damaged food grains, to convert it into fermentable sugars. So that will be done in the course of time.
And is there a plan of that expansion over the next 2 to 3 years? I mean, have you planned out how you will do it?
Yes, sir. We had applied to the government of India under their scheme, and we have received clearance from them as well.
Give me a sense of the expansion plans. You spoke about the fact that you're going to use a large chunk of the money for reducing your debt levels by 240 odd crores. But I also understand that you also already have permissions in place to increase your crushing capacity as well as expansion in your distillery.
So right now we have permissions. These permissions are enabling permissions. Our immediate use of free cash flows, when we pay down the debt, the investment, that will automatically generate free cash flows over the next 2 years, which is an investment cycle we need to invest in specialty chemicals. So that money released, so to speak, the free cash flow released will be used to invest in specialty chemicals. And secondly, the government has also sanctioned under the interest subvention program for our creation of a grain-based ethanol facility. So that's how we are going to take the business forward.
Mr. Khetan, what is the kind of cash flows that can be expected once you pare down your debt by 240 odd crores?
Sir, cash flow in the sense, if you consider 240 crores, if it is payable over a period of 5 years, so every year we'll get a cash flow of 50 crores towards principal, and about 5 to 6 crores of the interest amount. So it will be around 55 crores to 60.
This is Somaya.
Incremental cash flows.
Yes. You were adding something here?
No, I was just saying, beyond that, forward-looking numbers, I think we are, he's just talking about what would be the saving in print, but, forward-looking numbers, we are at...
I understand that, yes, but yes, I have my job to ask as well. So I was trying my luck. Just to look at the business mix that you have today, sugar 42%, bio-based chemicals 28%, and distillery 26%. Over a period of next couple of years, do you see this mix changing? Because I think the street would be a little more excited on the kind of the biochemical story that you're building, and sugar is something much more regulated in nature, and so it's very seasonal in that sense.
Sir, I repeat, in the past year, the suspension of the ethanol program did not allow us to make the full ethanol we could. And therefore, our product mix switched to